If you had a bad experience in crypto, ask yourself what drove it. Were you allocating your time to KOLs that were telling you how to make a ton of money and get rich overnight? Did you put all your eggs in the basket of leverage trading and trying to get 1000x? If somebody comes back and they say it was too confusing, eventually, somebody ripped me off because I gave my seed phrase to the wrong person. Well, we've come a long way. The technology is better, the systems are better, regulatory clarity is better, the communities are better. If you want to avoid all of the slosh, you can avoid it now. If you have conviction in the industry, you can buy and hold Bitcoin, ETH, AVAX through a structured product that is a few steps to get started and requires no other commitment to manage.
What's up, everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest is Abram Wimmer. He is the founder of HODL Bonds, and I'm excited to have him on the show for you. I'm happy we finally get to catch up. I've been really excited for everything that you're building. I appreciate you coming on the show. So we'll go ahead and kick it off about some market talk, generally questions on what market we're actually in. If you and I were to only look at Bitcoin, you'd think investors have been a little cautious. It's been pretty rocky this last week. But if you look at AI or parts of the equity market, you'd think maybe we're still in a strong risk-on environment. Do you think investors are becoming more selective, or are we experiencing a much bigger shift in how that capital gets allocated, and what kind of market do you think we're actually in?
Yeah, it's a great question. It's a very opinion-based answer because nobody's going to know the right answer. However, so my background prior to being in crypto for 5 years, I worked at Goldman Sachs in the credit risk management division. I was a hedge fund specialist, covered all the major hedge funds that traded with the bank. And one thing that I did was I created a flow of funds tool that would track from asset class to asset class where money's going. Because when we see losses or gains in the market, it isn't just outright losses, it's a zero-sum game. It's going somewhere. Where's it going? That's very important to understand, to maybe predict where it could go in the future and then benefit from that move. So yeah, we're seeing movement away from majors within the digital space, but not as bad as people think. It wasn't too long ago when we went from these levels way further down. So when people are like, oh, it's over, people are exiting. No, there's just other opportunities that are likely more attractive or feel safer. So we have safe haven people that are going to move it out if there's any regulatory risk, or if gold feels better, because people kind of go back and forth with safe haven, going gold, silver, back to Bitcoin, kind of all operates in a similar way depending on your long-term horizon. But then you have people with other opportunities like a SpaceX IPO or AI changing the world. And every time a CEO tweets about a potential of AI, people are like, oh, we got to get in. So I think that this is a really unique time to be alive and have access to resources to deploy, because there are many options out there. What's difficult, though, is even 10 years ago, when I was right in the thick of it at Goldman, there were way less options available. So that flow of funds was either stocks, bonds, commodities, alternatives. Alternatives now is defined by so many different ways. We got digital asset classes. We got so many more structured products across traditional and now on the blockchain. There's so many options. So I think people are trying to sort what's right, and also struggling tracking through all these new options where money's actually going.
Well, I do want to ask, how was that transition from traditional finance to the space that we're in now? How was that job shift for you?
Refreshing, scary, and challenging my patience, I think. Refreshing side is when you work for the man. You can be an intrapreneur. You can promote change. You can be creative. You can try to innovate systems, but it's still capped on an overall limitation, because either you're building somebody else's dream or their direction. You can't change. You can change degrees, but you can't change much. Or you run into just philosophical differences or bureaucratic red tape that are quite frustrating. So it's refreshing to step away from that world and look at an industry that is so ripe with opportunity. I don't care what industry you're in. Blockchain can make it better. It can make it safer. It can make it more efficient. So being a part of it is refreshing. However, there are a lot of people in this space that I think come for the right reasons, but then stay kind of for the wrong ones, and then eventually leave for unfortunate ones. You know, people are impressed with the whole value proposition of owning your assets, of participating in operations that previously banks held completely. You know, deploying capital to an exchange and getting fees was never something a normal person could do. But you can do that on decentralized exchanges, right? People come for some part of that vision that speaks to them. And then they see somebody make a bunch of money on a meme or a leverage trade, and they're like, ooh, FOMO. I can do that. I'm a crypto guy. And then eventually, inevitably, you kind of get wrecked or have a bad experience, and then see the down market, see all the FUD on X, and then leave. We're going through this cycle of users where we're getting rid of our own users we're trying to grow. So I think in that sense, for me, it can get discouraging or maybe a little frustrating at times, because I want the space to grow, and we need products for the downtimes, for the emotional management, for accumulating wealth that aren't just short-term focused on the large 10, 100, 1,000x. We have a space for that too, but we also need to be building products that allow people to stay in the space. Something like HODL Bonds that, you know, is a structured product that allows your holdings or a portion of your holdings to grow passively, especially in volatility. Something like that allows somebody to fall back on these kind of products that don't have tokens. There's no hype. There's no way to really get burned while they're also having fun being a degen and exploring the space.
Absolutely. And I love that you mentioned gold, right? Because for years, Bitcoin competed against cash and gold. Today, it feels like it's competing completely and solely against AI and SpaceX and some of the biggest, I guess, technology companies that were ever built. And it's been kind of tough for gold. Do you think crypto's biggest competitor become artificial intelligence, or would you say something else?
I think crypto's biggest competitor are the holders of crypto. I think it's the emotions. I think it's overreactions. I think it's the unrealistic expectations. But that's the driver. That's not necessarily a competing asset. What competing assets are out there? I'm going to use buckets instead of underliers. The safe haven bucket is a big competitor because the narrative keeps coming back and forth. Put your stuff in Bitcoin, because when traditional fiat currencies fail or are manipulated or inflated, you know, Bitcoin as a universal digital currency won't be affected by the same drivers. So it is a safe haven asset, but it's a little bit different because it doesn't have the history of gold, nor does it have the real world value of gold. So it isn't directly comparable, but many people, in terms of behavior, will treat it similarly. However, if the safe haven approach is because of a certain driver, and then there's like regulation where, you know, China comes out and says crypto's bad, or, you know, another Trump meme comes out and then there's, you know, accusations of certain trading and everything, people won't look at it like safe haven in those cases, because now it's like a risky new thing that nobody likes. So I feel like people kind of hop back and forth on that aspect. With the opportunity in like emerging technologies, if there isn't anything happening in the space that is massive, but there are other things happening in traditional stock market options, like SpaceX, of course everybody's going to liquidate a couple of their, or a little bit of their crypto to go and take advantage of those opportunities. So I would say that it's its own asset class. It just at different points in time will cater to different emotions, whether it's the runaway from fiat currency safe haven or run to potentially better opportunities in the short term among the technology umbrella. It kind of like ebbs and flows between those two depending on the market, rather than like identifying its own specific industry. I think it kind of like wears different masks of the existing asset classes we've always had.
If you had to pick one consensus opinion that you think investors are most likely to be wrong about over the next year, what would it be?
That you have to exit crypto at all. I think that people are constantly saying, hey, it's a bear market, move your assets elsewhere, and we'll come back later when it's not a bear market. Aren't lower prices when we're supposed to be buying? Aren't we supposed to be trying to grow our wealth outside of banks, outside of government control? Isn't that why we entered the space anyway? So I don't know what views are out there specifically that I would go against, but if any of them say, liquidate your entire portfolio and get out of crypto and come back later, like that's not, if you believe in the technology and you're a fundamental investor and you want to capture those movements long term, you got to hold. But what sucks is missing out on other opportunities while you're holding. And that's, I think, what feels bad. But what happens usually is people get whipsawed. They're holding Bitcoin, market's going down. SpaceX IPO, they sell a bunch of Bitcoin. They get in at the top of the IPO, it drops. They get nervous, they go back to Bitcoin, and then it's at a higher price now because other people moved it in. So now I've lost value there, and I'm just over trading and getting whipsawed. Sometimes the right decision, if you have conviction, is to not trade. But if there's a product that while you're not trading and while you're hodling could also accumulate for you in a sustainable way, well, then you double win. So I would say any narrative that says that you have to sell your Bitcoin or ETH, I don't agree with. Put it in a HODL bond and let it grow while you go and do other things. That's the counter narrative that I'd present that covers pretty much any specific one that goes against it.
Yeah, I think one of the oldest sayings, and I love that you touched on that, HODL. One of the oldest sayings in crypto is simply HODL. We've been saying it for years, but I think after years of volatility, multiple bear markets that you and I have experienced, and constant narrative shifts, that's become a lot easier to say, as we both know, than to actually do. Mm-hmm. Has the idea of simply buying and holding become outdated?
I think it is becoming outdated because of our access to information. So if we go before X was really a big thing, I would say since DeFi summer, there's been a lot of successful efforts on X or Twitter. And a lot of companies jumped on that, maybe shilling their own token, but connecting with their community, because you would create community and then you'd have discords and everything. So as we started to do that, it became easier to hodl because you had community, you had KOLs, you had connectivity that differed from traditional like CEOs of large corporations that there was no transparency, really. You'd get transparency maybe once a year or quarter with earnings, but even then, you don't know really what you're getting. So I think for a while, it became a lot easier to hodl, and that's where the term really got popular. But then every single person became their own personal KOL. FUD started to be completely out of control. Communities would actually, in many cases, destroy the very protocol they were supporting because of this like mob mentality. KOLs, many of which were posting not real returns and not real trades. And so you kind of got overwhelmed with emotion that got in the way of people hodling or holding with conviction. Your conviction is tested because you see nothing. You see is you see nothing but FUD. You don't know what to do because you see other people either getting wrecked or making a bunch of money and you're making none. So I think a lot of people just get fatigued and exit. The HODL conviction is there, but it's a lot harder in this market, and there wasn't a product or like a structured layer that let people do it with much less effort. And that's the whole thing around HODL bonds, is becoming that structured layer. We call it structured hodling, to cater to all those reasons that, for a lot of us, if it's not a bull market and everybody's winning, it's hard to hold. You can't one direction hold. If you're holding, you got to hold through it, but you also need a benefit. And that's where it's been really tough to find the balance between both.
Okay, so crypto needs better investment products for sure. Traditional finance, and you and I both come from this background, has spent decades building products that help other investors manage risk instead of constantly making those trading decisions. Why do you think crypto hasn't evolved in the same way? Why are we still asking people to manually navigate every market cycle themselves?
Yeah. It's interesting. So if you were to think of somebody that has, maybe they're like, they work in the medical field and they have nothing to do with financial instruments. It became pretty normal in the 90s for them to allocate their retirement to like regulated investment funds. And then that regulation adjusted over time, even to the point where companies would match it. And there was a lot of tax relief and everything to encourage people to invest in their future, specifically their retirement. So a lot of products came after the fact to make that easier. Now you can literally load up like a portal wherever you work, and the portion that's taken out of your check pre-tax, you allocate to mutual funds. There's some hedge fund options. There's exchange traded funds. There's so many different things you can do now that you couldn't do before. Now you compare that to crypto, very little, because a lot of what's gotten VC capital, short-term attention, headline news, they're either bad things that they were bad simply because they weren't sustainable. They were kind of bubbles, or they were things that were the result of like nefarious or illegal behavior, or just kind of a lot of shilling and hype. We need investment in similar direction as traditional finance in crypto, so that the core needs of people vibe with the core value add on blockchain. If one of the core needs is build my future wealth passively while I keep living my life where I don't have to be a finance guy, I don't have to be a crypto guy or gal.
That'd be nice.
When we get there, I think it'll start to shift. But man, hey, you want to hold Bitcoin? Cool. Centralized exchange. All right, cool. Get a digital wallet. Also get a multiple kind of wallets, because you want to be safe, and don't share anything with anybody. And here's all the different bridges. Oh, and these are routers. Oh, and now here's all the derivatives available, and these are the vaults. All they wanted to do is hold some Bitcoin and watch it grow. So the more things that come out, although in short term, and maybe for that protocol or their native token that they're trying to promote, it makes sense to people. When they zoom out, nothing really makes sense long term, and that's why they lose their conviction. Or they just kind of fall back to Bitcoin, which makes sense to all of us long term that are in this space. So with products that make that easier, that have a track record, that are successful, and bridge to the traditional world, you can't just leave out all the hedge fund managers and banks and financial institutions and professionals that created the thing in the first place. We don't want to exist separately. We want to be adjacent to the traditional world and hopefully add value that's different value that traditional banks give. So HODL bonds, one thing that the user does when they mint a bond is they choose their strategy ran by a external, we call them HODL strategy providers. In the future, we can add all these traditional managers. We can be the bridge to bring them onto the blockchain, to execute trades for and behalf of their holders without commingling anything. They don't have to bring in money and hold it at a bank and have mystery on what they do. It stays in the smart contract. Your $100 that you put in a Bitcoin HODL bond stays in a smart contract that you can only get back, and then they just get limited access to trade it under guardrails that are audited, that you can trust. So we don't trust people, we trust code. And now you have transparency. You can sell it with a secondary market or borrow against it. And you get to watch your cheese grow because you hold the keys. Nobody else does. So now you get benefit from the professional old world, but all the perks of the new world of digital blockchain. And essentially any retail user can go from an email and a credit card to a professionally managed tradable HODL bond, Bitcoin, Ether, or AVAX in like a minute.
So that's awesome, right? Because I think retail is definitely looking for something like this. Is that who this product is really designed for? Is your just average retail trader, an investor?
So this product, depending on the budget, the market, and other opportunities, it is primed very well for retail. People that have never even been in crypto because they don't know where to start. For them, this is a huge improvement on the springboard into this space. And then also, so for example, the first ever HODL bond that was minted like 3 weeks ago, it was a day before there was a lot of market sell-off. And it actually captured that move. And even though prices for some of the tokens, I think the one I'm referring to is an AVAX bond, are down, went from like $9 to like $6 something, the bond's up double digits. So now that retail investor that, buys Bitcoin, puts in a HODL bond, looks at the charts, they're like, oh man, Bitcoin's down 15%, pulls up their HODL bond, it's up 5%. They're like, oh, I'm HODLing smartly, and this volatility is feeding my returns. Our first manager, it's all about tail risk. So when there are tail risk moves and you feel bad, HODL Bonds makes you feel good. If it's a sideways market, there's no high frequency trading or leverage here at all. So yeah, your HODL bond won't do much, but the prices aren't doing much either. We're just helping you hold.
All right. So you also mentioned that you guys are very focused on building on the blockchain. I want to ask where you guys are mainly putting your focus in, and who's been supporting you while you've been building HODL bonds.
Sure. So in order to answer that, I'll kind of set the stage on what we needed from a blockchain in order to create HODL bonds, because not only is the initial bond minted on chain, the tokens that you put in never leave the chain. They don't go to a manager, they don't go to a bank, they don't get commingled with anybody else. They also fully execute through DEXs on that chain. So every time it trades, you're adding volume to the DEXs that you support, if you are in support of that ecosystem, which if you're in the chain, you probably do. So I started shopping around. You would be surprised at the limited TVL on EVM compatible chains on DEXs that cover Ethereum and Bitcoin. They'll have a lot of TVL for their native token. They'll have some liquidity here and there for others. But man, Bitcoin hides away on Bitcoin network or centralized exchanges, and ETH kind of stays on mainnet. However, there was one that stuck out significantly, and that was Avalanche. Avalanche has been focused on DeFi almost since day one. They've had strong DeFi ecosystem. They've shifted from to other industries like gaming and RWA, but they've never really left the DeFi focus. And you see that with the various protocols that are there. They have number of DEXs, which is redundancy. You need to have more than one DEX if you're going to execute this strategy on one blockchain. In case there is something that happens with that DEX or the liquidity within it, you need multiple pairs and multiple protocol or origins, in my opinion. Well, Avalanche has multiple with healthy TVL, significantly healthier than any other chain that we were looking at. So as we started to look into HODL bonds, choosing Avalanche as the home and the initial launch, interacting with the treasury, the foundation, the marketing people, and the community, it wasn't new to us. We've been building in that space almost since the beginning. I participated in the first ever Avalanche subnet, DFK chain, which grew over 1 billion transactions. That's more than other entire blockchains combined. Yeah. So they have good technology. They have a focus on DeFi. They have community, and they had liquidity. On top of that, they wanted us. They wanted to work with us. A new DeFi primitive that could bring in retail users, cater to existing users, and help institutional folks. And if you've seen, Avalanche is very connected to institutional folks within the industry and outside of the industry. It was really a perfect match to start with, and they've been incredible to work with so far. And since we've launched, it's been seamless on Avalanche C chain. So as HODL Bonds grows in bonded TVL, so does Avalanche C chain use case for their token of AVAX, for their native DEXs like Black Hole and Pharaoh and others, and for the users that benefit from actual on-chain activity passively as the market does its thing.
Walk me through the process of what it would look like for you. So I know you have been a big influence in the decentralized finance space for the past couple of years that I've known you. And we both have a lot of similar followers. Some of them have been in crypto and, like you said, have left, have exited, or maybe back in Web 2. And some, I think, are looking to come back and to get into crypto. If I were one of those users or just someone new into retail, what is the first thing that you would do if I was looking to make some sort of entry to get back into this market, or to possibly just learn about crypto? Because this cycle is definitely a much different cycle than the previous 2 or 3 that we've had.
Yeah. So a lot there, because a lot of different personalities would fit in that bucket. So I can't say one thing that would fix all, but let's say for the person that left because they lost a bunch of money on something they didn't control, on a risk that was probably way outside of what they should have taken, and they're coming back. They're probably coming back a little bit more hesitant. I would say if you had a bad experience in crypto so far, ask yourself what drove it. Were you allocating your time to KOLs that were telling you how to make a ton of money and get rich overnight? Maybe this time around, give a little bit less equity to that source. Don't ignore it, because they are good signals, and a lot of times they're very helpful. But did you put all your eggs in the basket of leverage trading and trying to get 1000x? If so, it's a matter of time. That's more of gambling, right? If somebody comes back and they say it was too confusing, every website when I was around looked like it was from the 90s. I had to do all these things myself that I didn't understand, and eventually, somebody ripped me off because I gave my seed phrase to the wrong person. Well, we've come a long way. The technology is better, the systems are better, regulatory clarity is better, the communities are better. If you want to avoid all of the slosh, you can avoid it now. It's a lot easier to find like-minded people that see it as an asset class, but also are coming in hesitant. If you're coming in because you did everything right, but in doing everything right, you bought Bitcoin at 100,000, you lost a bunch of money, and you realized that loss because you were emotional and didn't know what else to do and had no professional products to help you. Well, we got HODL bonds now. If you have conviction in the industry, you can buy and hold Bitcoin, ETH, AVAX through a structured product that is a few steps to get started and requires no other commitment to manage. So in the past, whether it was technology, maybe bad decisions, or just the overall market shift causing emotions and not having the tools to respond, I would say come back. Check out HODLbonds.io. It might be a product that helps, and there are other products out there as well. Where you spend your time in the space will dictate your experience. If you're in the meme trenches and you made 1000x once, hey, keep doing that if you think that's fun. Just make sure that's not everything you do. Because if it is, eventually you'll lose. It's a numbers game. If you're 100% just buying Bitcoin and letting it sit in the bank and not doing anything with it, well, there's yield out there that you can get off of it. That doesn't require much from you. This time around, there's better solutions. And if you are so confused that you ended up getting hacked or something happened that was quite unfortunate, it's not only better now, but hopefully you've learned. Come back and be a little more cautious. And I think how you spend your time and your focus will define your experience. We got better stuff to spend time on, and we have more experience.
Absolutely. No, that was a great answer, because I know people are wanting to come back in the space. I saw, speaking of space, I saw a lot of spaces being kicked back up and running.
Like
and
Twitter spaces?
Yeah, and it brought back all of the nostalgia.
Yeah.
From being involved. But like you said, like communities are still active, and I think the ones that showed longevity and stayed, it's because they're actually focused on building infrastructure and structured products, like you mentioned. This is my favorite question that I like to ask every guest that comes on the show. And I know you're going to have a great answer because I know you personally. You're such a good person. What is the legacy that you want to leave behind on this earth?
On this earth or in the space? They're kind of different.
Either one.
I'll answer it from the space so that we don't start talking about surfing and
I need both. I want
water
both.
Preservation and everything else.
No, that's been an answer actually.
Yeah.
So.
Well, maybe I'll just answer both. My vision for the space is that if we do this right, majority of people that enter will not regret it. And I think that today, majority of people regret it. At one point or another, they regret it because they over trusted or got confused or lost money or followed the wrong person or just got unlucky. And that's what happens when you're on the forefront of innovation. There is trial and error. There are people that come in that take advantage of people with good intentions and try to exploit it with their bad intentions. But we're working through all of that. I think we've worked through a ton of that, actually. My vision is that as people enter the space, they realize that blockchain can make their life better, not only financially, but so many other industries that are around, like how we live, how we communicate, how we authenticate what's real or not. Blockchain can help all of that, even gaming. Initially, I came in working on a tokenized game that made it easier for people to understand DeFi and make it gamified. that brought in so many people that otherwise could not compete or participate in the DeFi race. It made it easy and to understand. The long-term vision I have was totally consistent with the efforts of DeFi kingdoms, and continues to be as gaming industry is kind of in a pause. DeFi kingdoms is still beautiful technology, and I hope that it continues to do what it has always done for users in the future. Now we need users to want to be back into blockchain gaming, but that's something I don't control. So that's my hope and vision for the space. For the world, it's a bit different. Every time there's a new bit of technology or theme or fad, I think the potential direction or outcomes of our world changes dramatically. And in the last year, AI has done that yet again. Not just like, oh, you're going to take my job. I don't know if you watch South Park, if you remember the took my job. You're going to take my job, or you're going to automate this or that. When in reality, it's just the supercharged tool to unlock completely new industries, completely new ways of living and working and doing so many things, but it's at a cost. Cost like, how much water does it take to cool down systems that are data centers that are telling us, which direction to go, or we're using ChatGPT like a dictionary or other things. We're consuming a lot of water. What are some solutions there? Well, humans are smart, and they're even smarter with technology like AI, and they're already starting to figure out alternative solutions. So my hope for the world is that every new thing that comes, we don't go doom and gloom, we don't FUD, we don't give up, we don't change what we've once believed. We just adjust to the new norm and continue our passion in a new way. And with everything that's come out so far that does have some negative side, if there's some value to it and there's a cost to it, if we come together as people and don't tear each other down, we'll probably figure out how to manage the cost and make sure that it is worth it. And if it isn't, we all stop doing it. Easy. It's not like we're going to keep using something until all the water in the world dries up. No, we're going to figure out how not to use so much water to cool down our AI systems. We're already doing it. China's building data centers underwater. They're making closed systems now where you're actually cooling down systems with hot water, where nothing is actually ever used or evaporated. And then the closed system, it never loses any. There's ideas out there to fix all of our doom and gloom. So if you see the doom and gloom, rather than giving into the fear and adjusting what you once had conviction in, participate in the solution. We'll figure it out. As long as our communities stay net positive. What scares me is when things go net negative and entire industries crash simply on emotions. We need to figure out how to do better with that, since social media has made it really hard to be resilient to such things.
Absolutely. No, that was a wonderful answer. Well, I appreciate you coming on the show and dedicating your time for the market run up. Well, that was it. We're going to go ahead and wrap up there. If you guys like this episode, make sure you follow along, subscribe, like, and get ready for next week's episode. We will see you then.